Welcome back. I knew I'd get old David Morgan. Keep in mind, he's up there in the Pacific Northwest. I'm here in the East Coast. Hell, he's probably just now had his morning coffee. How you doing, David?
I'm doing well, and apologies for being late.
Don't worry about it. I mean, I don't know that I'd be ready at 7 o'clock in the morning. How was your holiday?
It's very good, thank you.
They're taking gold to the woodshed this morning. I just looked up the last tick. It's down $17 to $12.74.
Yeah, it's pretty common. You know, I've been in the, commodities arena for decades, and I've noticed, and it's not just the gold market, although today it is, obviously, but anytime there's these long holidays, you really, if you're trading actively, it's a good idea to be flat or neutral or out of the market. Let me just restate that. It's good to be out of the market. I've seen it over and over again on these extended weekends where when the U.S. market reopens, if you're long, it's going to go the other direction. So I'm not surprised. It looks like the central planners, the central banksters are definitely defending the $1,300 level in gold. And now it's really the $20 level in silver. They just don't want to see these metals move up above those levels. And seems every time that they do, it isn't too long before they're smashed back down. And unfortunately, my take at the current time is this will probably continue for the summer. Now, I always have to give a caveat, and it's more imperative now than ever. I mean, there's so many noises around the gold world, Alan, as you well know, about these other nation states that are saying, hey, I want my gold audited, I want my gold back, I want to go see my gold, that kind of thing. And this is putting a lot of pressure on the real gold market. You got to remember that the amount of physical gold and silver that come off of the futures exchange out of the CME is roughly 2% of the total amount of contracts traded. So that's better than your fractional reserve banking system that's roughly 1 to 10. So what are we really discovering here with the price mechanism? Are we discovering the price of a derivative, or are we discovering the price of gold or silver? And the reality is both, because you can buy the physical metal at those settlement prices now, but that doesn't mean that it will always work, because most settlement takes place in cash. Most of the people that are in the futures markets, be them individuals, sovereign wealth funds, hedge funds, money managers, hedgers like mining consortiums, that type of thing. Almost every case, they're settled in cash. So they're a cash derivative of a physical product. So I won't go on any further, but it really is something to think about, because the facts are always the same. That the physical reality doesn't equal the paper paradigm. The paper paradigm is winning again today, but that doesn't mean it's going to go on forever. And I know people get frustrated. I know they get upset. I know that they even probably get tired of hearing that. But when the day comes when they don't match, and there's an explosion in the market. And the other thing, Alan, that is going on, as you well know, is this, silver fix that's going to end, I guess, the 14th of August.
I am familiar with that. Speaking of auditing, Austria is the latest one that is demanding to audit their gold holdings.
Exactly. And Austria is a pretty old school free market type of nation state. Of course, all of these countries now are fairly socialistic in my view. But, the reason that gold is so important is that if you go through monetary history, it's stability, it's honesty, it's truthfulness, it's integrity, it's things that matter in the financial transaction, whether your settlement is a pile of salt, a bunch of cattle, or whatever. It has to do with integrity, and people have discovered over centuries that gold is actually the best, gold and silver really. And it's about integrity, it's about honesty, it's about honest weights and measures, and all these things have been, moved to the side, so to speak, in the current financial world. I mean, the whole system is based on super leverage, and most of it's derivatives. And the derivatives, although they're important in the gold and silver markets, as I just outlined, when they're super important is in the financial system of the debt markets, the bond markets, the currency markets. And these derivatives are steering the boat, and the leverage on these things is incredible. So there's a very, very deep problem that hasn't really been addressed since the financial crisis of 2008. In fact, it's actually gotten much worse, and the amount of players that are at the top are fewer than they were in 2008. So this time, the idea is that perhaps the Fed wouldn't be able to come to the rescue. It might have to be the IMF. And the idea that, the government can kiss it and make it better always is incorrect, because we have history on our side showing that governments fail. And that's the one thing that, people don't even consider, is that a government can fail. Hey, look at the Roman Empire. Huge empire, huge power, went on for quite some time. And the Eastern Empire continued, but the Western Empire failed. The government failed. And governments failing is nothing new. I mean, if you have any kind of cursory look at history, governments do fail. The experiment with the United States Republic is over 200 years old. And in my view, it's failing, because if you look at what's going on with the, God-given constitutionally secured rights and how they've been usurped by the current people at the top, if you don't have the government that you started with, what do you have?
What do you make of country after country now demanding at least an audit, if not the outright return of their gold holdings that are being held by these central banks, primarily our own Federal Reserve and the Bank of England?
Well, that's what I think. Well, I'll call it a gold run, or a gold walk. I'll coin that phrase. A gold run or a bank run is when everyone rushes at the same time and says, I want my money or I want my gold. It's a little more subtle than that. It's not a rapid run, but there's a great deal of concern. Look, no matter what these central bankers say, no matter what the mainstream press is reading off of their teleprompter, the truth is gold matters to these people. And they just give an opposite opinion when they're on TV, but behind closed doors, it's very important. And I think a lot of these countries are concerned with, where is it? How many times has it been swapped? Do you have my permission to swap it? What is the status of it? And I think it's going to continue. I think it's starting as a walk, Alan, and I think it could turn into a jog, and it could go into a full-bore sprint, depending on what happens as Austria and these other countries come to the fore and say, hey, what about me? What about me? Now, they all have a vested interest in the paper paradigm far more than the gold market, up until it doesn't work. In other words, once the system starts to fail again, then they're going to look for that lifeboat. And that's their gold. And if they don't have it in hand, or can't touch it, or can't get it, or get access to it, then it's going to really increase the disorder. So I think it's a very strong clue that things are not right with the overall financial powers that basically control the money system.
Do you think, and by the way, can you stay with me for one more segment?
Yes.
All right. Well, I'll set you up for this one. I'll tell you what, it's down $20 right now to $12.71. And I know that it really comes under pressure every day when the physical market closes at 2:30 Eastern time. So they may hammer it down to about $12.50 before we see some sort of rally. Hey, let's go ahead and take a break now. We're speaking to David Morgan of the Morgan Report. David and I will be back on the other side of the break. Welcome back. Joining us is David Morgan. David is the editor, the publisher of the Morgan Report. He is an expert, and perhaps the expert here in the United States on the silver market in particular. So they're really hammering gold and, to a lesser extent, silver this morning, David, in an environment, to me, which should be very bullish for the precious metals. We do know that there's central bank manipulation of the precious metals market. By the way, the S&P is now up almost 11 points to 1911. How much longer do you think the central banks can get away with smashing the precious metals market?
Well, that is the question, isn't it? I mean, it's, really impossible to answer. I don't think anyone can say it with any accuracy. I mean, I've got my forecast along with others, but, it's really tough. You've caught early on that when you get asked these type of questions, you can give a price target or a date, but never give the two together. But it can't go on forever. I'm certain it'll happen in my lifetime. And I really think we're getting very close. I mean, I think by the end of this year, that not necessarily it'll unravel, but I think there'll be so many indicators that something is drastically wrong in the gold market or the metals markets, really in the markets in general, but for those of us that follow the metals, because the metals are an indicator of, the truthfulness in the system or how well the financial system is performing. And the higher gold goes, the more it's a barometer indicating to everyone that something is wrong. And then it goes from being wrong to drastically wrong to terrifically wrong to horrifically wrong to, oh my God, what's going on wrong? I mean, and that's an analogy to the price movement to the upside. And of course, to keep those emotions at bay, the central planners continue to try to keep gold in a contained area and really working hard to keep it in their 1300s, we said in the previous segment. I think it's going to go on probably for another year or so. But, there's so many black swans out there, so many things that can take place at almost any time. And you see the powers moving from west to east, as we talk about on your show from time to time. How much physical gold is moving into China. And China knows what's going on. Russia knows what's going on. The BRICS are, avid gold buyers. So at some point, and as we said in the first segment, there's all these countries that are coming to the fore saying, what about me? What about me? Where's my gold? Is it audited? I want to see it. I want to, get an audit of it. I might want to bring it back, that type of thing. So there's a lot of pressure, and it's building and building. And when it will break, it's like predicting when a dam will break. If there's a leak in a dam, it will start seeping, and it's pretty hard to know exactly when it's going to break. But once it goes, it's a flood that takes place. And that's a good analogy for what could happen in the precious metals markets. One thing I'd caution people is trying to get the exact low. I think that now is the time to get it while you can. There could be a time in the future where it's really difficult to get the metal. You might be able to at a small level, but I think the large players, the large hedge funds, the large bullion holding companies, that type of thing, might have difficulty getting millions of ounces at a time. And once people get scared to hold on, they really won't want to sell. If things go the way I have predicted, there'll be a situation where people want to hold tight. They wouldn't really want to sell. So it's going to be interesting, very interesting times. Financial conditions continue to deteriorate, really. There are some, bright spots in the economy here and there. It's not all gloom and doom. And you don't have to look at it that way. You can look at it as optimistically as you choose to. I'd say try to be realistic. But you don't need to put all your money in the gold and silver. All you need to do is make up your mind of what you think the possibility is of economic fiasco. And if you think it's about a 10% probability, then that's probably a good amount to put in metals. And don't worry about it. You've got yourself covered. And if things go on as they have been, then so be it. And if things continue to go the way the trends are, then you'll be glad that you have some portion of your money in the physical metal.
I would think the fact that these countries are demanding their gold and not getting it, or auditing and not being allowed to audit, that would be a big story. And yet we're having to go to the foreign press to even know about this stuff.
Well, absolutely. It's a very important fact. I mean, if you did a survey, and I haven't done this one, I've done some surveys on the streets here, and so they're always fun to do. But, one of these surveys where you just pick people at random and ask them if the United States is on a gold standard, I'll bet you about 50% would say yes. There were people in the government and Congress that didn't know that we weren't on a gold standard. I mean, this is, to some of the studies that, like I do, has made my life out of it. It's ridiculous, but it's something that people don't really pay attention to. And a lot of people still, although now, I mean, it used to be hardly anyone knew that the Federal Reserve was a private corporation.
Still don't.
Owned most of, still don't, but many do. But I mean, you go back when I, was in my 20s, and I mean, people, they'd argue with you that you're wrong and that type of thing. But that piece of information is pretty well known by a lot of people, although years ago it wasn't. The gold thing, I would be interested to do a survey and ask how many people think that the dollar's backed by gold. The other big question is, is there any gold in Fort Knox? It hasn't been audited in a very, very long time. And this is another thing you think in a free country, a free republic, a government of the people, for the people, by the people, you'd be able to go in and say, well, where's our heritage? Where's our, what's our monetary base? And take a look at Fort Knox. And, of course, I think it's very interesting what's really in there and what is it. It'd sure be nice, but I don't think there's any chance you're going to get into Fort Knox and take a look at what's really there.
I did talk to DeBay Buchanan, who was Treasurer of the United States for part of the Reagan administration, and she was present for an audit they did back in the early '80s. But I don't think it's been audited since then. Of course, who knows nowadays? I mean, I was watching the Tout TV networks late last week, and they're just bending over backwards to come up with one excuse after the other for this rapid rise in food prices that we're seeing. They're blaming beef prices on the drought. They're blaming pork prices on the pig virus. They're blaming eggs on the weather. I mean, it's just like I haven't heard any of them try to come up with the excuse right now for oil or gasoline where we are. They're just doing everything but pointing to the cause, which is, in my view, the Federal Reserve.
Right. Yes, the monetary system. I agree, and it's breaking down before our eyes. It truly is, and how it unravels, no one knows. And in an economic collapse, put collapse in quotation marks. The wealth doesn't go away. I mean, things continue on. They're more awkward, and there's areas that can have shortages and disruptions, and there's a lot of things that can go on. But nonetheless, it isn't like the world stops turning, the sun doesn't rise or anything like that. But it does take time to rebuild. And the problem, I read the Collapse of Complex Societies by Tainer. It's a very good read, and the one thing I got several things out of the book. The one thing, no matter what the cause, if it's weather, if it's economic, if it's war, whatever the cause, once you start down, you can't come back up very quickly. I mean, it takes a long time to come back up, and that's the problem. The trend in the U.S. is clearly deteriorating, regardless of the numbers. The numbers behind the numbers that John Williams produces shows that inflation is much higher than stated, unemployment is much higher than stated, real income, real purchasing power has deteriorated for the average American since about 1978. These are the real facts, and most people know this stuff. They might not know the exact dates or the exact numbers, but they can feel it. They can look on the street. I mean, I was coming back from the airport here recently, and doing my normal drive home, and there's even more, for lease commercial buildings, these strip malls that used to have, businesses in every slot. Now there's 3 or 4 that are empty, and I come back and there's now 5 or 6. I mean, it's just not getting better.
Oh, that's true. In fact, yesterday I went out to visit my parents, and we went past at least 2 ghost shopping centers where there might be 1 or 2 businesses open. And what I hear there, they're all blaming it on Amazon, where if Amazon were responsible for that many shopping malls going out of business, hell, they'd be doing a lot more business than they are. They're just really trying to tell us that things are great.
Yeah. Yes, they are. And they are very good at reading the teleprompters and the mainstream message. And, of course, the whole thing is a confidence game. I wrote about it, years ago, and many others have as well. But it's basically confidence in the system. I mean, to hold a piece of paper that intrinsically really has no worth whatsoever other than your belief and your faith that, that's going to buy a cup of coffee, that's going to buy, a couple dollars will buy you a pack of gum or whatever. I always kind of laugh to myself about the atheists. I'm not, but they have no faith. Well, yes, they do. They have faith in the monetary system. So anyway, it is perplexing. It is complex. It is something that's we've gone through before. My, I guess, fear, I don't like to be a fear monger, but my, I guess, concern is a better word, is that we've never experienced it at the level that we will this time, because it's a global problem this time.
David Morgan of the Morgan Report. David, I appreciate it. Heartbreak. You there?
Yep.
All right. Thanks a lot, David.
Thank you.
Bye.
Bye-bye.
Silver123.net is a silver saver program designed to be as simple as possible. For as little as $50 per month, you can set up and create an automatic cost average buying program that will get silver or gold sent to your door on a monthly basis. The first step to creating an account is easy. You will supply some basic information. Next, you will add a bank account from which you will schedule your purchases. Scheduling purchases makes saving easy. Silver Saver is customizable and allows you to control the amount and the date of purchase. Once you are signed up, you are then given your affiliate code. Now you can save in precious metals and also market this program. You can use email, web pages, and multiple forms of social media to share the Silver Saver program. Silver Saver will reward you generously with physical silver or gold whenever someone you refer becomes a saver. Silver Saver not only provides you with a share code, but also allows you to place your own banner ad on a website of your own. Silver Saver is one of the best ways to start saving and accumulating gold or silver, especially at these levels. Visit silver123.net and start saving today.